and help you pick the right stock at the right time.
Good morning, you're watching Daybreak on Bloomberg Quint Live and I'm Alex Matthew. First, the headlines this morning. Asian markets have begun the trading day with gains. News of Chinese importers buying US soybean gives heart to investors. UK Prime Minister Theresa May wins the vote of no confidence against her, ensuring another year in office at the helm. Market regulator SEBI says it is looking to tighten risk management norms for liquid and money market schemes of mutual funds. This is owing to volatility in inflows and outflows over the last few months. And lower fuel prices and food prices pushed India's consumer price inflation to a 17-month low. On the other hand, the index of industrial production was at an 11-month high in October. And finally, Yes Bank will hold its crucial board meeting today, where it will deliberate on a new MD and CEO to succeed Rana Kapoor. Let's talk about US markets now. US stocks came off session highs but still closed higher on Wednesday after a series of developments boosted expectations that a US-China trade deal could be reached in the coming months. Bloomberg's Abigail Doolittle wraps up all the action on Wall Street in this report.
Stocks climbed in Wednesday's Wall Street session, even though the major averages did end up finishing off the highs at the end of the day. Both the Dow and the S&P 500 climbed by about 0.6%, while the tech-heavy Nasdaq outperformed up nearly 1%. The big story, though, was the fact that there weren't any directional whipsaws. The bulls or the buyers were in charge all day, unlike many of the other recent trading days where we've had whipsaws up and down. Now, that was supported by bullish sector composition. 8 of the S&P 500's 11 sectors did trade higher. The 3 down sectors were defensive sectors that are less popular on risk-on days, similar to the day that occurred on Wednesday. As for the top sector, consumer discretionary helped out by Amazon, along with some of the gaming stocks such as MGM and Wynn Resorts. Overall, that sector up more than 1%. The financials importantly rallied. That sector's really been under pressure, flirting with a bear market. Its first up day in 6 sessions, so that had to be fairly encouraging to investors. And of course, tech, another day of strength for technology. The FANG trade doing quite well. Facebook, Amazon, Netflix, and Alphabet. Overall, that complex was higher on the day, up 1.9%. And Apple traded higher too. Now, it wasn't a big gain, up about 0.3%, but it was the second up day in about a week, a little more than a week. And of course, those shares are in a bear market. So a little bit of stabilization on the day, very important considering its big weighting to the major averages and also its influence on overall consumer investor sentiment. But interestingly, oil fell on the day. So this has really been a movement of risk on and risk off relative to all of the risk assets. So while stocks climbed, commodities did finish lower, suggesting there could just be some more volatility ahead. In New York, Abigail Doolittle, Bloomberg News.
All right, well, that's the update from the US. Let's go straight across to Bloomberg's Rosalind Chin, who's joining us from the Hong Kong studios live. Good morning, Rosalind. What are you picking up this morning? From what I can see, it's all the similar cues that are coming in from the US that are taking up in Asia this morning.
Yeah, so optimism over those trade ties between US and China really driving the markets higher so far. At this point in the session, the MSCI Asia Pacific Index gaining about 0.25% at this point in the session. But what we're looking at really is these comments that have been coming out overnight, and of course action in some cases from China. So we did see, for example, that China has bought up to 2 million tons of US soybeans. That's according to the US Export Council. So that's the first sizable purchase in soybeans since these tit-for-tat trade spat sort of has started earlier in the year. So that has been seen positively. We're seeing the soybean futures at the moment actually slightly in the red because it really does depend on future action depending on what will happen in terms of those soybean purchases. Now, China's also said it's considering plans to delay its emphasis on pushing forward with its tech innovations, its so-called Made in China 2020 sort of plan. And that, of course, has been a key issue for US lawmakers, and it's a key part of a key bone of contention, rather, for this US-China trade dispute that has been ongoing. So that has been a little bit of movement there. And of course, we've had Xi Jinping promising that they're going to open up the Chinese economy and allow greater access for outside companies to enter China. Although, that said, the White House has overnight been signaling they think China still needs to do more. So generally here, markets are taking this positively, following some higher stocks rising in early trade. We've got the Nikkei up by about 0.5%, the Topix gaining by about 1/3 of 1%. Now in Japan, though, some of the key stocks which are moving are consumer stocks, including Fanuc, which is actually a tech stock, and also fast retailing. But the second most heavily weighted on the Nikkei is in fact SoftBank, and that is losing right now. It's down by 2.25%, and that is partly because one of its lead underwriters in the IPO of its domestic telecoms unit did say that it had made an error in terms of allocating shares, and that is what's impacting SoftBank at this moment in time, down by more than 2%. But which is see that situation should be resolved, as the lead underwriter did say. One of its lead underwriters did say it's going to get in touch with investors and allocate them the shares that they had requested. So that has been moving currently. So a lot of different factors are pulling on the markets today, but generally a positive mood. Generally, we're seeing them moving higher at this point in the session. Back to you.
Thanks so much for that, Rosalind. Let's move over and take a news update from the UK, where there's been a lot of developments in the recent past. British Prime Minister Theresa May has survived the political battle of her life, defeating a vote of no confidence triggered by Conservative politicians. With a vote of 200 to 117, May stared down rebels in her party and clung to power in a secret ballot. Here's how she responded after her victory.
Here is our renewed mission: delivering the Brexit that people voted for, bringing the country back together, and building a country that truly works for everyone.
All right, but there are still a lot of potential issues that she has to deal with despite that victory. Bloomberg's Sebastian Salik has all the details in this report.
What we learned today is that there are 117 people who don't back her leadership. It doesn't translate directly into people who don't back her Brexit deal, but there's a certain amount that can be inferred from that. So she needs these concessions from Europe. One possible bargaining tool is the risk of a no deal. We will get that on March the 29th if nothing else is agreed. The EU doesn't want to see that happen, so that could be used to reach these concessions. From the draft summit of conclusions that have seen by Bloomberg, EU leaders saying that they will explore further assurance. So a slight conciliatory tone being drawn there, although they say that this will not change or contradict the withdrawal agreement. So they're not going to veer too far from what's already being agreed. The people that she really needs on board are the DUP, the Northern Irish Party, that are currently propping up the government. They are crucial if she's going to have the numbers to get this deal through Parliament, which is what she so desperately needs right now.
All right, well, that's all the updates from overseas, but Darshan is here now to tell you all about the trade setup for the day and also to tell you what's happening in the futures and options space. Darshan, well, indications of a positive start today as well. How are we looking broadly?
Yeah, so the global cues are decent. They aren't fabulous, but yes, they are not negative at this point of time. And that's why our markets are also expected to open positive. The SGX Nifty is certainly indicating that, you know, after a 200-point rally yesterday, another 40-50 point uptick is something that we can expect. So let's take a look at the SGX Nifty, indicating a 40-point uptick about the 10,800 mark in trade. So the traction is pretty strong. As far as the ADRs go, let's see what happened there. Most of the ADRs ended with a positive bias. Tata Motors was up 7%. The banks rallied. ICICI Bank, HDFC Bank rallied, Vedanta rallied, Commodities, banks, all of them rallied. So in fact, if you're looking at most of the ADRs, except for Dr. Reddy's, which had negative news for it, and Infosys, which was down in trade, all the other ADRs managed to end with a positive bias. How did we pan out in trade? We were up almost 200 points on the Nifty, but look at the outperformance that continues in the mid cap and the small cap end of the market. Take a look at the Nifty Bank, take a look at the Nifty PSU Bank Index, and all of them did manage to rally. So yesterday was a broad day of positive cues coming in from most of the indices. As far as the flows are concerned, again, FI sold in 1,300 crores, and pretty much a similar amount was bought in by the DIs in the market. Now, if you're looking at where the Nifty was up 188 points, except for Dr. Reddy's, which was down significantly. All the other counters contributed positively. The HDFC twins contributed, and that's why the Nifty Bank also managed to rally. L&T, ICICI Bank also managed to rally. Reliance rallied in trade. So most of the counters did manage to rally on the positive side, and the Nifty was up close to 200 points in trade. As far as the F&O market is concerned, no doubt there was positive traction that was seen. Fresh longs was seen on the Nifty. Open interest build up of 2%. On the Nifty Bank, open interest build-up was even higher. It was at 10% with the fresh long positions that were taken on the market. Now, we are close to the 10,800 mark in trade. We are seeing that call writers are active from 10,700, in fact, 10,600 to higher levels, and put writers from 10,700 to lower levels. We will open pretty much at close to 10,800, which means that, call writers from 10,600 right up to 10,800 or 900 will be forced to shed positions in open interest, and put writing will become much more apparent. What happened in trade yesterday, pretty much a similar picture will be seen, that at lower levels put writers will become much more active and call writers will be forced to shed positions in open interest. The two stocks in the F&O band continue. There are no changes. Adani Power and Adani Enterprises are the two stocks. As far as the PCR is concerned, the Nifty PCR moved in much higher at 1.47. The Bank Nifty PCR also managed to inch in at 1.44 from 1.414. So there was traction that was seen. As far as the F&O stocks are concerned, TVS Motors saw open interest build up of 40% on the long side. Again, you had Cholamandalam and IGL that managed to rally. Dr. Reddy saw fresh shorts. It had negative news of the Suboxone sale. That saw fresh shorts on open interest build up of 14%. In terms of stocks which saw open interest decline, so you had counters like a Torrent Power which saw short covering that came in. Bank of India, Balkrishna Industries, all of them saw short covering that came in. So yesterday among the mid caps, pretty much it was a day of short covering.
Well, thanks so much for that, Darshan. The big update that we've been tracking over the past couple of days is the change in the helm at the Reserve Bank of India. And Shaktikanta Das took charge yesterday as the new governor of the Reserve Bank of India in unusual style. He, in fact, tweeted about it from his Twitter handle. But be that as it may, the appointment of Shaktikanta Das, who is, as you know, a seasoned bureaucrat, as the governor of the RBI may help regain the confidence of investors, particularly foreign investors, jolted by the unexpected resignation of Urjit Patel. That's the word coming in from Manishi Raychaudhuri of BNP Paribas. He was speaking to Bloomberg's Sherry Ann and said that the functioning of the Monetary Policy Committee at least would not be impacted as it works under a framework. Listen in.
The new RBI governor is an Indian Administrative Service veteran. And to that extent, one advantage this appointment could have is to iron out the differences between the government and the central bank. All over the world, we see such differences, but when they come out into the public, that has a sentiment dampening effect, which we have seen in India. If that gets ironed out, and if that so it becomes a thing of the past, that could lead to some degree of, what should I say, relative lack of volatility in the market. But it's clearly, I think the jury is still out there as far as the kind of policies that the RBI would follow going forward.
Just finally, Manishi, of course, we have seen that sell-off in U.S. markets and that leading to valuations falling. This GTV chart on the Bloomberg showing that forward PEs are back to those 2016 levels. Just quickly, Manishi, tell us, are U.S. stocks going to compete with emerging market stocks for attention from investors next year?
Over past 20 years, there has been only 2 instances of decoupling, where Asian markets have moved in divergent direction compared to the U.S. market. So if there's a sharp correction in U.S. equities, it would quite likely have a similar impact on Asian equities as well. Having said this, I would think that even if the U.S. market corrects, there are a couple of reasons why the Asian markets may not correct to that extent. First, Asian equities are a lot cheaper, both in relation to their expected earnings growth and in relation to the return on equity that we are forecasting right now. Second, as I pointed out, that there's a possibility of the fund flows which deserted Asia and emerging markets in 2018 returning back in some measure to the emerging markets.
All right, I told you that Shaktikanta Das, tweeted about his taking charge of the Reserve Bank of India. The other thing that he did, in direct contrast to his predecessor, was that he called a press conference on the very first day and fielded questions on a range of issues. Here's some of what he said.
Every institution has to have its professional integrity, maintain its professional autonomy. At the same time, every institution also must adhere to principles of accountability. We have to have stakeholder consultation. We'll have to have consultation with everybody. Government is ultimately the government has an, government is not just a stakeholder, but I mean, the government of the day runs the economy, runs the country, and manages major policy decisions. So that there has to be free, fair, objective, and very frank discussion between the government and the Reserve Bank of India. And I would like to believe that all issues, howsoever contentious, can be resolved through discussions. I will sort of uphold the autonomy and the integrity and the the credibility of the Reserve Bank of India as an institution. And I would believe that the autonomy and independence of the RBI as an institution is very important, and it will be intact.
So more to set the tone than anything else, that address to the press yesterday, it didn't go into any specific details on a range of issues from the banks, from policy and various other things, but clearly encouraging signs that he means to start dialogue at least with the press and other stakeholders. But meanwhile, Fitch Ratings has said that the resignation of Urjit Patel as Reserve Bank of India governor highlights the risks of increased government influence on the central bank, which in turn could undermine the efforts to address the bad loans problem. Let's move on now and talk about another regulator. In a board meeting yesterday, market regulator SEBI approved a proposal to club investment limits for FPIs on the basis of common ownership of over 50% or common control. The move was based on the recommendations of the HR Khan committee. The regulator also spoke about tightening the risk management framework for liquid and money market instruments of mutual funds. The word is that it will take the appropriate steps at the right time. Let's listen to what Chairman Ajay Tyagi had to say on both these issues.
Clubbing of investment limits for FPIs. You would recall on 21st September 2018, we had taken out 2 circulars on the eligibility and the KYC requirements of FPI. So this circular, which we intend issuing, will be on clubbing of investment limit of FPIs. In a nutshell, the proposal of clubbing will be on the basis of common ownership of more than 50% or common control. However, in case of appropriately regulated public retail funds, investment limits will not be clubbed on the basis of common control. Accordingly, SEBI will carry out necessary amendments to the SEBI FPI regulations and issue necessary circular guidelines to implement the same. For liquid funds, actually what needs to be done, that we are in discussion with MFI and with mutual fund industry, and will take a view at appropriate time.
Last evening, there were also updates on the Indian economy as inflation eases further even as growth revives. CPI inflation continued to trend lower than expectations in November, while IIP growth was at an 11-month high in October. Ira Duggal has more.
The inflation data for the month of November is both good news and bad news. Good news for those hoping for an easier rate stance or lower rates, but bad news for those who are focused on the rural economy and the potential for disruption there. You got CPI inflation in the month of November at 2.3% compared to October's 3.31%. The forecast was 2.6%, so the trend of underperformance to forecast has continued. We're at a 17-month low on CPI inflation, of course, well within the band of the MPC IPC's comfort zone. Food inflation, that's the CPI food inflation, showed disinflation of 2.61%, so negative inflation. Within that, vegetables, sugar and pulses continue to lead the disinflationary trend that we are seeing on food prices. Important to start looking at the breakup of rural inflation and urban inflation as well. And rural inflation stands at 1.7%, well below the 3.12%. That's the bad news part of the inflation data, because it's going to again lead to far more concerns about the rural economy, and you'll start to see politicians talk about farm loan waivers, etc., particularly ahead of a general election which comes up next year. That's the CPI inflation data, so take the good with the bad. In terms of the headline IIP numbers, you got strong 8.1% growth, festive boost, yes, but even accounting for that, the number was quite strong, say economists. Manufacturing printed at 7.9%, that was strong. Electricity and mining also showed a fairly strong growth. If you look at the use-based classification, consumer durables growth at 17% was good, but this is a festive month, so you discount that number a little bit. And the problem on consumer durables will start when the NBFC credit stops flowing, if it stops flowing. Consumer non-durables was decent this month as well at 7.9%. But if you put the two numbers together and try and draw implications for interest rates, I think in any case, a lot of economists had started to expect a softer policy stance and perhaps rate cuts in 2019. You may see more people start to think about rate cuts in the next year.
Right. One of the key talking points when it came to inflation was the crude oil prices. And let's talk a little bit more about that. We are joined now by Yash Upadhyay, who's going to tell us all about the updates in the commodity space. Morning, Yash. I believe there's significant volatility in crude oil prices.
Morning, Alex. So yeah, crude oil prices did give up most of its gains, or in fact all of its gains, in just the last half hour of trading on Wednesday, with Brent crude giving up more than 2% of its gains to end marginally in the red after US inventories data showed that American stockpiles had fallen by just 1.2 million barrels last week, as against the expectation of 10.2 million barrels. So a big miss there. Mixed cues coming in as far as the base metal space is concerned, with most names ending the day flat to marginally lower. Aluminum ended the day unchanged. Zinc and copper fell anywhere between 0.5% to 0.8%. Nickel, tin and lead managed to advance in trade, whereas spot gold prices, they ended the day marginally higher as investors continue to remain on the sidelines.
Right. Thanks so much for that, Yash. Well, there are clearly lots of stocks that you have to watch out for in trade today. But before I tell you about that, let me also tell you about a few stories that you can find if you look up the website, bloombergquint.com. Of course, you'll find all the live market action right there. But in international news, let me tell you about Michael Cohen. If you've been following the entire investigation by Special Counsel Robert Mueller, you will be familiar with this. Michael Cohen, who long kept President Donald Trump's business and personal secrets, is headed to prison, in fact, pledging that he will continue to spill potentially damaging information to Special Counsel Robert Mueller and other prosecutors. He was, in fact, sentenced to 3 years in prison on Wednesday in a courtroom appearance in which he spoke with audible emotion, surrounded by family, and in tones that were sharply critical of the president. In other news, the European Central Bank, led by Mario Draghi, is widely expected to end its 2.6 trillion euro stimulus today. He will also likely face questions on how the ECB plans to reinvest the bonds that are maturing and that have been acquired as part of the central bank's 4-year stimulus package. All right, with that, let me turn now to Nikki Mirchandani, who's joining me to tell you all about the stocks in news. Good morning, Nikki. What are the stocks on your list today?
Alex, bunch of news that I'm tracking this morning. I'm going to start off with Yes Bank, where the board is going to be meeting today to shortlist names for new chairman, and also is going to be considering the appointment of independent directors. So that's clearly one stock that we need to keep an eye out. IOCL, where the board is going to be meeting today to consider an approved buyback of equity shares, and also Lupin, which is expected to pay a fine of €40 million after the European Union General Court has upheld the European Commission decision in parent-operator litigation. Apart from that, we're also looking at Sun Pharma, where the company's subsidiary Taro has received a tentative approval for Dapsone by US FDA. Strides Pharma Science, where yet another pharma counter that is expected to be that's making in news today. Singapore arm receives US FDA approval for an ointment which is used to numb skin. Now the drug will be immediately launched by the company in the US market. Separately, an infra company is expected to be in focus, given that Sadbhav Engineering has received an appointed date, which is December 9th from NHAI for its EPC project of 981 crore in UP, which means that it can now start execution of this project. DLF, where the board has deferred QIP of around 17.3 equity shares. Now, this is mainly for the exercise in order for the company to be a debt-free, but then the board has now sought fresh shareholders' approval, given that the validity of the existing approval expires by December 26. And also Infibeam, which is now rescheduled some of its meeting, which is going to be for consideration of growth opportunities. That's rescheduled to December 17. Apart from that, the last counter that we'll keep an eye out will be Punjab and Sindh Bank, which is expected to raise equity via QIP for a tune of around 500 crore and is also expected to issue bonds worth around 1,500 odd crore in the span of next 1 year.
Thanks for that, Nikki. Well, I'm joined now by Somit Sarkar, who's going to tell you all about the big brokerage calls of the day. Good morning, Somit. What are you picking up today?
Good morning, Alex. And the big brokerage calls for the day, first we have is Morgan Stanley on Interglobe Aviation. Now, the brokerage has upgraded the rating on the stock to overweight from equal weight and has also hiked the target price to 1,311 from 790. Now, according to the brokerage, the recent down cycle in the aviation industry due to higher cost and lower fares have strengthened Indigo's competitive position. Now, Indigo's stronger balance sheet has helped it gain market share from weaker player in this recent down cycle. However, currently the things have changed as the cost headwinds have now receded while yields have improved, which is the average passenger per kilometer per passenger. Now that has improved. Now on the back of this change in market dynamics and higher market share, the brokerage says that the valuations are also attractive and the risk reward is now favorable to invest in Indigo. The second we have is Macquarie on Ujjivan Financials. Now the brokerage has maintained its outperform rating on the stock but has cut the target price on Ujjivan to 290 from 460. Now according to the brokerage, the RBI rules have been an overhang on the stock, but the same is an opportunity for the long-term investors to buy the stock. Now because of this overhang, the street has overlooked the improving business fundamentals of the company. Now the brokerage is expecting its book value to grow at a compound annual growth rate of nearly 15% for FY18 to FY21, while it is expecting the company's return on equity to expand to 16% by financial year 2021. Now, however, the brokerage has cut its EPS estimates on Ujjivan Financials to factor in a higher cost of fundamentals, but it still expects the stock to double over the next 3 years.
Thanks so much for that, Amit. Now, think fast. Which is the last Hollywood movie that you saw? Well, the reason I'm asking you about that is because female leads in Hollywood movies are apparently bringing in more money than male leads, according to a study by creative artists agency and tech company Shift 7. From 2014 to 2017, most blockbusters passed the Bechdel test, where two female characters talk about something other than a man, just like in Wonder Woman. Take a look. Well, that's all we have for you in this edition of Daybreak, but up next is all you need to know, so do stay tuned. This is Bloomberg Quint.